Hey everyone, and welcome. I'm Jason E. Brooks from HospiVation, and today we're diving into one of the most overlooked profit levers in business: tax credits. Whether you're running a single location restaurant or managing a multi unit franchise, this conversation could uncover tens of thousands of dollars in credits you didn't even know you qualified for. And I'm joined by someone who lives in this world every day. Michael Smith from ADP. Now, Michael's been in the tax strategy space for nearly 30 years and works with businesses of all sizes to unlock real incentives, from hiring credits to energy upgrades and even R&D. Michael, thanks for jumping in today.
Thanks, Jason. Glad to be here. And so let's spend a few minutes today kind of going through, as you mentioned, some of these overlooked opportunities for small, medium-sized businesses and so forth that they can take advantage of. So let's start by kind of unlocking those tax credits for small businesses and franchise. So let's just kind
Okay.
of dive in and keep it going. First, just a very quick disclaimer. This presentation is not considered legal advice. It certainly is not the final word on today's topic, particularly with all of the legislative doings that are out there. And it's also not a political opinion. So, before taking any actions, we always encourage you to consult your advisors, internal or external counsels. So, with that, once again, Jason, thanks for the intro. Here's my simple bio. As you mentioned, I've been doing this for over 3 decades now. I am currently and have been a sitting CPA for several decades. I was in public practice for about 15 years, been with ADP not once but twice now for over 15 years. So, again, good to be with everyone. Hope you'll find the next 20 or so minutes very informative. Here's a quick look at the agenda. We're going to give you a general overview of tax credits, and then I'm going to dive in a little bit more on job creation and training credits. We'll talk about investment tax credits. We'll also talk about an area that many people are not aware of, and that's transferable credits, credits that you could perhaps buy or sell as a business. And then lastly, we'll talk a little bit about research and development, which is an area that extends to all industries. And there's quite a bit of chatter out there nowadays about innovation, about items, keeping businesses competitive, maybe gaining market share. And many of those activities could fall within the research and development categories. So just to kind of continue on, let's start with this kind of overview of tax credits in case you're not familiar. You know, a number of items are out there. There's a number of providers. We at ADP have been doing this for a number of years. We got into it on the work opportunity tax credit, which is a hiring credit. And I'll dive into that a little bit more. But be sure that you're looking and aligning yourselves with a provider that has that depth and breadth of activity and resources to best serve you.
So, Michael, a quick question. Why do so many businesses miss out on these credits? Is it a lack of awareness, or is the system just too complicated for most operators to navigate on their own?
Right. Jason, that's a great question. And that's something that we see all the time. There are a number of reasons. One could just be that general lack of awareness. Why there are different governmental entities that provide information, it's not always readily available, meaning if you're not looking for it, you would be hard pressed to kind of understand. Other reason is the complexity. And by complexity, I mean if you were to read a website perhaps or some other informative site, it may look or appear that securing that credit, either one, you're not eligible, or two, it's much more of an effort than it actually is to secure the benefit. But that's a great question, Jason. So So that's why, we're kind of in the business is to help facilitate that. And that kind of leads me into this kind of tax credit continuum. And we're not going to touch on all of these credits today, but I think it's important that everyone understands, every industry understands that there could be benefits, whether it, as I mentioned, the buying and selling of credits. Training incentives is very big right now with reskilling, upskilling, with a relatively tight labor market still. There's also negotiated incentives, other credit for people that may be constructing new buildings, perhaps a new restaurant. There could be a cost segregation analysis. People that are upgrading their HVAC systems or their lighting to LED. There could be some energy incentives. We're going to talk a little bit more about R&D and how that may apply. We'll talk about, again, just up next, the hiring credit, as well as some geographic credits, and then some investment credits. So a full agenda today. So we'll try and squeeze it all in and get to some additional questions as well. But Jason, to your point is, where is that awareness? Why are people maybe hearing this for the first time? But governments design credits for a number of reasons. And this could be the federal, the state, or the local type government and jurisdictions. They could do it to redevelop a certain area, a geographical area that needs assistance on the economic front. They could do it to help spur job creation or capital investment. Many times they're doing it to help companies coming into an area on an expansion, perhaps relocation of operations. And also they're doing it as a way to encourage certain targets. So governments are very interested in incentives, and it's a good way to help and enable that type of economic growth.
Now, that last slide really jumped out to me. Hiring, capital, location, training. There's something there for nearly every operator that I talk to. So, do you need to be profitable to take advantage of most of these? Or can payroll based or forward looking credits still apply even if your net income isn't strong yet?
Great question again, Jason. And again, these are typically tax credits, so you would need an income tax liability. That being said, many of the state governments are offering some of these credits to be taken against their payroll taxes. And that way people pay payroll taxes, whether they're perhaps making enough income or they're doing activities that create an actual tax liability at the federal or state level. But that's a great question. And as you also highlighted, investment, there could be items like property tax abatements, again, that don't apply to the income tax side. So there still could be different ways to monetize these credits too. So but again, that's a great segue into why do companies pursue tax credits? Well, obviously, it's to reduce their tax liability first and foremost. And again, could be an income tax liability primarily, but some of these credits may also impact sales and use taxes paid, property taxes may be applied against payroll taxes. And so that helps companies kind of see the benefit, helps them keep cash or return cash to the business that they can use to expand, improve operations, maybe invoke additional technology. Overall, companies pursue credits to lower that effective tax rate. And again, just as I mentioned, find those above the line opportunities like sales and use, property tax, your kind of operating taxes. Those are also a benefit as well. And then lastly, just to reduce the income tax expense overall, just what you're paying in to the government based on your activity too. So very good question. Just real quickly on state tax trends, I won't spend a lot of time, but I'd be remiss as a CPA and a former practitioner. State tax trends are out there. We do monitor legislation. You can see that a number of states are slowly reducing income tax rates. They're not making them zero. Some of these are on the business income tax side, some are on the income tax side. You can also see the sales and use tax opportunities where some states are trying to minimize that, particularly for small to medium-sized businesses. And then lastly, property tax relief too. As homes increase, as a home or business property increases, some states are trying to, put some limitations on there so that that does not become overburdensome to the business and the daily operations. So great, uh, great dialogue so far. Jason, any additional questions before I kind of dive into a little bit more of the detail right here?
No, let's get into the detail. Let's get into the detail.
Great.
WOTC, yes. Let's get into this because this is the one that most restaurant owners, franchisees, franchisors speak on.
Right. This is the work opportunity tax credit. It's been around for over 4 decades and it has been under several different names, but it's been under WOTC for 25 plus years. It is a federal tax credit available to employers who hire and retain a number of different groups of people. And that could be veterans, it could be other groups. And I'll show you some of those information that's out there as far as those different groups. As you can see on this particular slide, on the right-hand side, I have some industry information. Talks about eligibility. That's eligibility of employees. It talks about average credit size that's out there. And Jason, I think one of the things you and I had kind of talked about in preparing for this is that, you know, what does a business need to do? Well, this work opportunity tax, WOTC is the acronym, really starts as screening employees, potential new employees, up to the point they're made a job offer. And that can be done in person, that can be done online. Many businesses use an online applicant system now. It's important to kind of do that process in a timely manner. And then each employer has 28 days to kind of certify that employee. And that's to send this 8850 form out to the appropriate jurisdictions. And that has to be done again within 28 days. And then lastly, what, is the benefit, if I can break it down to the actual, owner of a business, is that you could get up to 40% of the first $6,000 in wages. That's about $2,400 that you could get for hiring someone in some of these targeted areas. So let me,
40%. That is crazy because I was
yeah,
just with a group of franchisees. One of them said they hired 18 people this year. I asked them how many that they screened for WOTC. The answer, none. That is crazy that they didn't screen any of the 18 that they hired this year. And you're saying that up to 40% could be a tax credit of their salary.
that's correct. And here are, Jason, those targeted groups I mentioned, veterans categories, and there's different categories within veterans. There's the short-term TANF, assistance for needy families, the welfare to work, the SNAP, the stamp recipients. There's designated community residents. And I won't go through all of these. Summer youth employment is also a big area. And again, there's different categories, and different ones may help you achieve that. Again, the average, benefit we see here at ADP is probably $1,000 to $1,300 per employee. You can get up to, as I just used the example on SNAP right there, you could get up to possibly $2,400 is the cap. And then on veterans, you could get $9,600. And we do see a number of businesses really targeting categories like veterans because they are, a good population that are looking to work, as well as some of these other categories that are in need. So, this is a good win-win situation for everyone.
So, as a business owner, do I have to know at the time of hire about all of this, or is there any kind of retroactive path to qualify?
So this is a proactive screening, and by that I mean it needs to be done as they're being hired before that job offer is made. So unfortunately, we could not go back and look at people that were hired last year or perhaps at the beginning of this year. So it does need to be a process that's put into place as companies are doing their current and their forward-looking hiring. And those are just the rules that are out there on the programs. But again, it's a very big opportunity as I don't like flipping back, but I will because I think again, this screen where it shows the industries and the
Yeah.
eligibility and the average credit, uh,
Hmm.
again, this credit's open to each and every industry too. And this is a very good benefit, not only for employers, but also for the employees themselves, because it's creating jobs, it's creating opportunity.
Well, speaking of jobs, let's shift gears to training. A lot of operators are investing in onboarding, leadership development, and even compliance systems. Can those efforts qualify for grants or credits?
Right. There are a number of states that offer some form of training. There are some federal training dollars. Training, as I mentioned, is very important. You just talked about people that are upgrading their systems, maybe invoking additional technologies. Most of the opportunity is going to be focused on this reskilling or upskilling of existing employees. There are some programs for initial onboarding, but most of this is to help businesses stay competitive by looking and rewarding or incenting businesses that are spending money, quite frankly, to help their employees be better. They're adopting new technology, new processes, and new opportunities. And those skill sets stay with those employees, and they tend to grow. And really, Jason, we find companies that do training and they secure benefit, they actually end up doing more training. And that just benefits everyone from that regard.
Does it need to be a certified course, or can recurring internal training or leadership coaching count as well?
Right. Leadership coaching tends to not qualify more times than not. Most of these training, and they don't have to be certified courses, but they do need to be courses that are focused on typically the frontline workers and maybe the first level of supervisors. So it's really a benefit because those are where we see much progress made. And again, each state, each jurisdiction has some flexibility, but that's where we're really focusing on helping these people and helping the companies grow. So great. Again, another great comment. So, and just lastly, as we're about to shift, we talked about work opportunity tax credit, WOTC, job creation. There could be states, I'm here in Georgia. There are some counties where it only takes one or two jobs to trigger a credit. Some states require 10. So, Jason, you just used the example where, you had someone that you knew hired 18 people. So, again,
18 people.
it's amazing that these opportunities are out there and a lot of businesses kind of miss out. So, just again, somewhat quickly, we'll take a quick dive into investment tax credits because I think companies, again, are doing a variety of things, whether it's building new facilities, new restaurants, whatever. If they're upgrading their HVACs or their LEDs, if they're making improvements, there could be investment tax credits. And that could be just strictly for expanding, could be for certain geographical areas, could be for R&D related type activities. And as I mentioned, kind of those energy credits, we do see people re-roofing, they're putting on this solar sheeting. That could be a credit, just to improve the overall essence of a building. So those are very important too. And I think it's just very important to kind of get in. Very important. We always like to help businesses look at their CapEx budget and see
Hmm.
what they're doing 6 months out, 12 months out. There are
Hmm.
some federal opportunity zones. Those have to be done on an application basis before you start construction. That could remove your property tax liabilities for years. but you may get some bonus depreciation, some other aspects if you're in certain zones as well. So,
See,
what else?
this is though where folks lean in on is on this slide and on this information, because what I'm seeing here, you're telling me small businesses can actually buy state tax credits at a discount. Walk us through how that works.
Yeah, on these transferable credits, there's over 100 transferable credits that are out there. And I use this example of buying and selling, whether it's on the energy credits, whether a lot of activity in Main Street America, meaning people are redeveloping their downtowns. There could be rehabilitation credits for these historic buildings going into those investments. Those could be bought and sold. So if you don't have an income tax liability, you may be able to transfer that credit and sell it. And again, we see that anywhere from 70 to like 90 cents on the dollar. You could sell a credit or perhaps you could purchase one. The other thing we see, Jason, too, on these transferable credits is that a number of entities or a number of business owners, perhaps they're looking to retire. Perhaps their exit strategy is to sell their business and they may have some capital gains. And in order to kind of plan for those capital gains, you may want to consider buying some credits, again at 60, 70, 80 cents on the dollar, and that'll help kind of offset those capital gains that may come from selling a business or some sort of generational change in the business down. So a lot that's out there. I do encourage people to look at certificated credits. That's what we deal in. That basically means a local or a state or a federal jurisdiction has signed off on the credit, which kind of makes it audit proof in a way. So again, a great, great question.
So if someone's not showing a big profit this year, 2025, we all know there's been some headwinds. Can they still use those credits or should they wait?
They could use those credits. Many of these credits have a carry forward and they can have a carry forward generally at the state level. It's going to be 5 to 10 years. Some of these credits at the federal level, kind of like the R&D credit, has a 20-year carry forward. Some of them have carrybacks. So if you have kind of a flat year this year in terms of profitability and tax liability, but you had a great year last year, perhaps you carry that credit back 1 year and get a refund. So those are great opportunities too. And again, I know time is a little bit of the essence today, but some of these credits could be against sales and use tax. It could go against some of the operating taxes as well. So just real quickly, again, another credit like the work opportunity credit, the federal R&D available to all industries. We see all industries qualify. And what people do not realize is that this is the single largest federal credit that's out there on the general business credit form 3800, Jason. And so federal R&D, again, it's really designed for anyone that is innovating. And I always like to ask a potential client, what are you doing to remain competitive? Or what are you doing to grow and maybe add market share to your business? Again, it's a credit against payroll taxes, excuse me, against income taxes first, qualified small business, meaning you've been in business 5 years or less and 5 million or less in gross receipts, you may be able to take this credit against, your payroll taxes. And the reason I bring this up is we do see people in kind of the hospitality industry. Perhaps they are creating new packaging for food. Perhaps they are creating new recipes that may extend the shelf life of food. They could be doing other things on a process basis that may qualify for R&D. Again, this is an activities-based credit with the cost buckets being wages of employees that are doing that kind of research and development. If you occasionally hire a subject matter expert outside a contractor, those could be includable costs, as well as supplies, as well as cloud computing. throw this out there. We're seeing everyone, I won't say everyone, most everyone, develop an app because people are finding that there's not always the technology out there, and there's kind of a lower cost to developing app now compared to 5 years ago, Jason. And it's actually, they're able to customize it to make their business run. Sometimes those businesses that develop technology go on and license it to some of their peers. And again, those could be qualified R&D activities and qualified benefits as well. So with that, Jason, is there any kind of questions I've kind of missed on some of this that you
No,
would
no,
like to
no.
cover?
You have been absolutely awesome. I tell you what, this was packed with actionable insights. I know we can't save the planet in 25 minutes, but if you're watching this, don't wait until tax time to explore how you can be eligible. There is real money at stake. And my suggestion, if you want to talk through your business and explore your options, ADP is offering a complimentary screening. Just connect with Rachel Parkus. Use the link below. I'll also put it in the show notes. One conversation could literally put thousands back in your pocket. Thanks again, Michael. Thank you all for joining us, and we'll see you on the next series that we are doing with ADP.